Hello, everybody. Welcome to this fundamental analysis webinar here with AvaTrade. Just a quick systems check before we get going. Type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, I've got enough responses. Looks like we're up and running fine. I'll just type a quick message in case somebody forgot to turn their audio on. They obviously wouldn't hear me asking about it. Okay, so as always, we'll go over the idea that any investments obviously have their level of risk, and that's the same whether you're investing in real estate or something like we're talking about here with Forex, CFDs, spread betting, options trading. All these types of investments obviously carry risk, but at the same time, there's a huge potential for profit as well, which is why we're all here. If you want to read a bit more about our risk disclosure statement, it's found on avatrade.com, and you can check that out. As we move forward, just make sure you understand what we're covering is intended to be educational. I'm not a financial advisor. I'm not a licensed broker personally, but I am somebody with a lot of experience with literally working with thousands of clients. I've seen a lot of different strategies. I've seen what's worked very well. I've seen strategies that haven't worked so well, and everything in between. So as we go over ideas, please feel free to ask questions, that sort of thing. It's a learning environment for sure, and what we go over, you certainly can apply to your actual trading, and that's really the idea. Eventually, is for you to develop something that you feel will work for you. Okay. In general, we're focusing on fundamental analysis today, but also we'll pull in the charts and the technical analysis. Really, the two need to go hand in hand, but we're certainly going to base the charts that we look at on fundamental stories or news that's occurring right now. And just if it's new to you, fundamental analysis, what is it? It's bigger picture ideas like Brexit that's happening right now, or economic announcements, jobs numbers, those sorts of things that are occurring either geopolitically or economically within a country. And that type of news a lot of times tends to drive the movement of assets that are related to those countries. And so that's the idea of fundamental analysis. And we will take a look at an economic calendar. And there are different economic calendars out there in terms of platforms that offer the dates and times of different announcements that are coming. But these are what we call regularly scheduled announcements or regular economic events. And we'll take a look at some that have recently occurred, that will be occurring. And then there are obviously are extraordinary economic events. And I already mentioned Brexit. The United Kingdom's what looks to be exit from the European Union. That something like that doesn't happen all the time. It's not a scheduled thing regularly, and so we would classify that as an extraordinary economic event. And we'll talk a bit about that as well. Fundamental trading strategies. Well, we're going to get into that. We'll talk about taking the fundamental news to the actual asset and the price levels and trying to decide how that fundamental news can be used to help you develop a trading strategy potentially to go after some potential profits. And in terms of questions and answers, please feel free as we go. Ask questions. Don't wait to the end. I know on this slide it looks like, in the order you should ask questions at the end, but please feel free to ask questions as we go. Interrupt me. If I use terminology or something you don't understand, feel free to ask what I meant. There are no dumb questions. And as we go, I'll probably ask for some information from the audience as well in terms of assets maybe you want to look at if we have some extra time. Any questions before we get started? Okay, great. And I'm assuming, let me ask real quick, just type if you're a beginner, intermediate, advanced level trader, how long have you been trading? So I get an idea of the audience here in terms of what level, technical level I'm working with. And usually the webinars, they're usually intermediate to beginning traders, but I do get some advanced traders as well because it's no matter how much you know, you can still learn more. And some traders realize that even though they've been trading for a long time. Okay, looks like most of you are beginners, and that's, like I said, that's my expectation usually. But it doesn't mean the webinar isn't okay for advanced traders as well, because it certainly is. Okay, so let's get off the slideshow. Let's take a look then at some fundamental ideas that are happening in the world right now. Now, this is obviously a technical chart, and I see kind of a pretty nice thing happening on this chart, but let's not get into the technical analysis just yet. Let's take a look at maybe the fundamental news, and I've got the Great Britain pound up for a reason here. Let's take a look at the news and see what's happening in terms of this asset and what might be influencing the GBP. Obviously, the Brexit situation. Did anyone pay attention to the votes that happened yesterday? I actually watched a lot of it live on TV yesterday evening as it was occurring. Anyone have any idea what was established thus far? I obviously will summarize a bit here. There are some articles you can see here, even the article saying what just happened with Brexit and what happens next. So obviously, if you read that article, you'll get an idea. Any input? Anybody have an idea of what's going on with the Brexit? Or is the Brexit going to happen? Is it going to be delayed? What was decided yesterday when the Parliament was voting? Okay, someone's saying delayed. Actually, the part of the votes I saw was that they voted down. The UK votes voted down the ability to have a 9-month delay. They want a decision on the deadline coming up in March. That's kind of what they voted. It doesn't mean they have to stick to that, but that's what they voted. So it shows you their mindset is they want to work something out by that March deadline, and didn't go for the idea of delaying it for 9 months. Okay, so that might create a little more stress in the markets to say, hey, we've got to decide something here in the next month or so. And I'm sure you saw some of the bickering yesterday in terms of Theresa May's Plan B. It kind of wasn't a big hit. A lot of arguing about it, and the big thing yesterday, if you read some of these articles, you see May wins backing to renegotiate backstop. You see this article here, okay? But what does it say in the headline? What did the EU say about that? Okay, so UK is saying, yeah, we'd like to be able to renegotiate that, but what did the EU say about that? They say nothing has changed, meaning the EU says they don't want to renegotiate this backstop idea with Northern Ireland. And that's kind of a big deal because one side saying, yeah, we want to renegotiate it, and the other side saying no. So what we saw yesterday, let's go to the chart then with this in mind, that's what happened. And you might think, hey, they said they want to renegotiate something. That sounds good that they want to negotiate. Not when the other side is saying absolutely not. We don't want to renegotiate this. So what was the reaction to yesterday with the pound? Let's go off the 1 minute candles. Let's go to 1 hour. Right here's what happened. Okay, you see this dropping? Okay, the pound dropped after that vote came in. Okay, so it was viewed as kind of risky, not necessarily good for a good exit. That maybe it increased the likelihood of a no deal exit for Great Britain from the European Union. This is what those articles, as you read them, this is what happened with this vote when they agreed on the UK side that they want to renegotiate this Northern Ireland backstop, and the EU is saying no. Okay, that was viewed as negative for the Brexit news, and you saw the pound drop. Okay, and so that's an example of, if you're paying attention to the news and you see the timing of it, if we count back the number of hours, right, through today's morning and the night, it was back here, right around here when that was decided, and you see this big drop right here. Okay, it was actually this hour here, I believe, that it occurred. Okay, and so you look at how many pips did it drop in 1 hour. Okay, 144.01 all the way down to 143.08. So almost 100 pips in 1 hour. All right, so if you were just paying attention to that vote and you understood the concept, if you had done some pre-reading about this Northern Ireland backstop, and you understood that the EU didn't want to renegotiate it, and that if the UK voted that they wanted to, that might have been viewed as bad news. If you understood that when you saw that vote, that fundamental news came in, you could have easily had a position to trade down on the pound and made a lot of money. Okay, that's one example of fundamental news driving the movement on the chart, and we're talking about 100 pip movement. Okay, any comments, questions in terms of the Brexit? Any input? Doesn't have to be a question. Some of you are local to the UK, I'm certain. What are your feelings? Anyone trading on this? Okay, I see some of you were trading on it. Some of you did well, I see. You were paying attention to the news. Okay, tremendous. Okay, well, listen, it's one thing that's out there. It's a big driving story. What do you think? Let me take a poll. What do you think? And if we're looking at technical analysis here, there's a bit of a support line here, right? Let's talk a little bit about technical analysis. What's a support line? It's an area where the value of an asset for over a period of time has been hitting and going back up, right? It's an area where the price seems, at least for a certain length of time, not to drop below. Seems to be respecting a certain price point. And so going back to the 23rd of January, the price hasn't dropped below the line I drew here. Okay, this was a breakthrough, and it held here. Even with the news and the voting yesterday that was viewed as maybe risky for the pound, we saw it drop and hold at that same level, right, that was there. And that happens a lot of times with technical analysis, okay? Sure, the fundamental news drove the direction, but then the technical analysis seems to have determined the stopping point. And it happens too often to just be coincidence, meaning, did it stop after the bad news here just because that's where it stopped, or did it stop because that's where the support line was from back to the 23rd? Okay, and you see a lot of times that where those support levels are, that's where movements a lot of times will stop dropping. Not always, but a lot of times, and it can help you out in many events to know when maybe to exit from a position. If you were selling on that, what you might have deemed as bad news for the pound or risky news for the pound, this support level might have been the spot that you determined that you would take your profit, because you're thinking, it might have some hesitation when it gets to that level. Type okay if you understand that concept of support. Okay, so we've got two things happening here. We've got fundamental news maybe driving the direction you were going to trade yesterday on the pound, and technical analysis determining where you might have an opportunistic spot to take your profit because you think maybe it'll stop dropping. And you can see how that would have worked. This support level existed since the breakthrough on the 23rd. It held here. And so if you were trading on the bad news, looking at 1 hour candles or risky news, I could say, for the pound, maybe not bad news, depending on your viewpoint in the UK. If you were trading on a short position on the pound, meaning a sell position, this would have been maybe a logical spot to take profit. Okay. By the way, if more bad news, if you're anticipating there could be more news that'll make people panic even more, maybe there's going to be more bickering and arguing fundamentally, okay? You might not even have to know that it's going to happen, but in case it happens, in case there's more bickering and more fear, what kind of pending order could I put? Let me draw another line. What kind of pending order could I put below this support that if it breaks the support, we're assuming there must have been bad news, right? If it breaks the support, what kind of pending order could I have right here programmed to sell? Has anyone used pending orders? Ashraf, a limit order is if it drops, you're buying. That would be a buy limit. So limit orders are reversals. What kind of order is if it drops to a certain point, then I want to sell? Meaning if it breaks below the support, I'm assuming there must have been news that makes people nervous again, and so then I want to sell. It's a sell stop. Tinny, correct. Sell stop. Okay? So could we set this up? Sure. Let me walk you through. And so this is based on potential fundamental news that you're saying, if it happens, I think this will happen. Okay? Because there's such craziness in the movements of the pound with all this news swinging one way and then another way, you can just set things up in case it happens. Not predicting that there will be news that makes people more fearful with the pound, but in case it happens, because it could. So a lot of times what you see when a support level is broke is it doesn't just move a little bit. You'll see a really big movement once a support level is broke because the support level got broke a lot of times because of big news, okay? And so, so how would we set this up? Let's go to my demo account here. And you certainly could be setting something up on your live account if you wanted to, if you understand the news and you understand the strategy, not because I'm telling you to do it, certainly. I don't make a practice of telling people what trades or entry points to take. I'm just giving you an example of a strategy that could be applied. You could pick any entry points or direction you want. Okay, now, so something that might make sense. Let's do GBP, JPY. Okay, and that's this chart, by the way. So where's my support level? It's about, you see this old resistance right here? That old resistance point where it was hitting and dropping. Once it went through that point, what happened? It went up from 143.20 to 143.45. So 25-point rise in a very short period of time once it broke through the resistance. That's what we call a breakout. That happens time and time again with resistance levels and support levels. So here was the breakthrough up. So what do you think would happen if it broke through down? Same thing could happen. You could have a big run right back down. Okay, so to prepare for that, and you see that this support level honored this old resistance level. So this is a rule of thumb with support and resistance theory, that when resistance gets broken, it then becomes support, because whatever good news made it break through the resistance is what keeps it above the support. Okay, so these are general ideas, by the way. It's not going to work 100% of the time, but if it works even 50% of the time, you should profit, because if you set things up, your risk is much smaller than your potential gain if you set things up in a certain way. And you might, in some instances, want to set it up that way. So let's take a look. If I want an entry point below the support, someone give me a number. What's a good entry point to say if it goes this low, then it broke the support for the GBP JPY? And you might not be able to read the numbers on my screen. This right here, this line right here is 143.175. Okay, someone said 143, Tinny. Hey, I would agree. It's below the support at 143, but 143 is way down here. You see where I'm pointing? You would have missed this whole drop from below the support all the way down to here. So if we're trading on these 5-minute candles, unless we're looking at a bigger movement on 4-hour candles or something, it's possible you might want an earlier entry point, because the next support level is where? Let me draw the next support level. It's right about here. Okay, you see here was the old support, and then it ran up. So if it breaks this support, you might bank on the fact that it's possible it could run down to the next support level. This might be your take profit spot around 142.86, something like that, okay? And so if I say take profit, well, let me switch, by the way, from market execution to pending. Prepare my pending order, okay? And remember we said that's a sell stop. Sell stop means selling from a lower point. And so if my at price is just below the support, that might be like right here, 143.175. You see that number there. So entry price, at price, 143.175. Okay, and where might my stop loss be? What would make sense? If it breaks the support, and now I think it'll drop because it broke the support, what would make sense? Where would I put my stop loss? If it starts going the wrong direction, would I put my stop loss below the support or back above it? What would make sense to you? A SOT, yeah, that makes sense to me too. You don't have to agree. David, yeah, Nahid, looks like we all agree. Whatever made it break this support should then, if that holds, if it's testing this support again, it should hold and stay under and eventually drop, right? If it breaks back above the support, well, okay, the news must not have been bad enough. Maybe that's where your stop loss is then. So in this case, I'm looking at maybe 143.245, this line here. So stop loss, 143.245, okay, dot 245. All right, and then so what's the distance from my entry price, 143.17 about, to 143.24? Okay, that's approximately what, 7 pips. It's exactly 7 pips. Risk. That's my exposure. That's it. I'm risking only 7 pips exposure. Now, what determines how much in dollar amounts or pound amounts that exposure is? 7 pips could be 700 exposure. It could be only 7 pounds exposure. So what do I need to set here as my trade size, right? So if I do one full lot, does anyone understand if I do one full lot, how many pounds is each pip worth? We're doing a little risk management here. 10. That's it. That's it. And so if I do 1/10 of a lot, then it's 1. If I do 1/100th of a lot, then it's 0.1 pounds per pip. So you can determine with this setup how much exposure you want, how much risk do you want. Now, obviously, you have to have enough in your account to take the bigger trade sizes. So let's say I want to take one lot. You know, if my leverage is 30 to 1, and that's what a lot of people are with the retail leverage, or 20 to 1 on some of the assets, let's say it's 30 to 1. And you can find that on avatrade.com, by the way. Let me show you real quick where you see the leverages. It's important. Let me pull this over. And don't worry, we'll finish that trade setup. Here's avatrade.com. If I go to trading info and trading conditions, okay, this is important. And traders that have been trading for a long time sometimes don't understand this part. When you look at leverage and margin requirement, those are directly connected, okay? Let's look at FX. Let's look at GBP, JPY. I'll find it eventually here. They're not in alphabetical order necessarily. GBP USD. Let's find it. Here it is. GBP JPY. So if you are a pro trader, or in a country like Australia, South Africa, that has different regulations, you have higher leverage, 400 to 1, and you only need to put 0.25% towards margin. And you see leverage 400 to 1. 1 out of 400 is 0.25%. So the margin requirement is determined by the leverage. Okay, they're directly related. Let's say you have the 30-to-1 leverage. So then you need to put 3.33%. Okay, 1 out of 30 is 3.33% towards margin. You don't have to risk that much, but you have to have that much in order to open the position. So let's go with the 3.33%. If I go back to my demo account, if I take a position size of 1 lot, that's a 100,000 pound position. That would make me 10 pounds per pip. How much do I have to put towards margin? Any math majors out there? 3.33% of 100,000 is what? Anybody? If it was 3% of 100,000, it'd be 3,000, right? So 3.33% is 3,333, something like that, towards margin. Okay? And in this case, the margin currency is GBP because that's listed first in the pairing. That's how you determine margin currency. And so I would need 3,333 pounds to open 1 lot. That would go to margin. Okay, that doesn't mean that's what I'm risking. How much am I risking if I open that position? If it's 10 pips away, I'm risking 10 times 10, right? If my stop loss is 10 pips from my entry point. So my entry point on my sell stop, if you remember, was 143. Let me type it again, 143.175. Okay, and my stop loss was 143.245. So that was 7 pips away times 10 is 70. I'm only risking 70. Mohammed, you said 330. I'm guessing that's what you were saying goes towards margin. It's actually 3,300 for a position size of 1 lot or somewhere around there. Okay, 3,300 pounds. So, or 3,333, maybe if we're trying to be exact. So that amount going to margin then is not what's risked. What's risked is the distance from my entry point, which we said was right about here, to my stop loss. And so that's 10 pips away. If I'm risking, if the position size is $10 per pip or 10 pounds per pip, I'm only risking 100 pounds. All right. My take profit, remember, here's the next support level down here, 142, let's say 8.2, if that's where we put our take profit, 142.82. What's my potential profit here? How many pips down is my take profit from my entry? That's 18 pips and another 17 and a half, 35, 36 pips or so down. So that's 3.5 to 1. Potential profit, 35 or 36 pips. What I'm risking, 10 pips, based on where I put my stop loss. So this is where I said, even if you're right 50% of the time, you're still profiting. With a move like this, you could be wrong once, come down, it starts your sell, it goes back up, hits your stop loss. That could happen even twice. And then the one time it works, and it really drops, like you see happens on the rise. If it breaks the support and it drops like that, you're making 3.5 times more than you were risking. So you're still in profit, even if you won only 1 out of 3. Okay. Any questions on this setup about why I determined entry point, take profit, how you determine the exposure to your stop loss in terms of how much you're risking, how you determine the amount that needs to go to margin, all of those things, or type OK if you get all that. All right, so if you were going to take a trade of this size, the potential profit, let's say it's 35 pips down times 10 is 350 pounds. 350 pounds potential profit, okay? Risking 100 pounds. In order to take that kind of trade size, remember over 3,000 went to margin, and then you need enough to cover the small amount that you're risking to your stop loss still in the free margin. so that you don't get into margin level trouble. So you'd probably want at least 4,000 or more in your account to go after that type of profit. All right. If you're working with a smaller balance, then obviously you can't open that big of a trade because you have to be able to cover the margin requirement, and you should have enough left to cover the movement to your stop loss as well. And also if you want to trade on other assets. Okay. So if you want to trade with this trade size and you want to trade on 3 or 4 different things, now you're talking 15, 20,000 should be in your balance to appropriately be able to open the positions and cover the movements to your exit points, whether it's your stop loss or your take profit. Okay. All right. So I don't know. I'm going to place this pending order. Whoops. I need to reset something. I need to be 70 points away. Oh, the price moved closer. So it's so close to my entry point, I can't put a pending order right here unless it was further away. So in this case, I might wait and see if it breaks. I'll go ahead and sell now, right? Or it moved back up. So if it gets back far enough away from my intended entry point, then I can place it. Okay, so that's something as well. When you try and place something and there it went. Just because it went back up a little bit, now I was able to enter it. Okay, it only needs to be about 7 pips away. And now it's over 10 pips because here was my intended stop loss and here's my entry point. That was 10 pips. Now it was over 7 pips, or what they call 70 points because they're counting the micro pips. I was able to place it. So if you ever have a problem with that, just wait till the movement goes the right distance away, or wait and maybe enter with a market move. Okay, so now you see this is in green. That means it's closer than 10 pips. If it isn't green, then it's further away than 10 pips in terms of being near my entry point. Okay, and if this breaks, we'll see if it plummets. Maybe it'll happen while we're talking, while we're doing the webinar. Okay, let's look at another story, more fundamental news. And by the way, and let me get this out of the way. And bring up the proper web page. Let's try again. I've got 2 different Chrome entries open. Okay, there we go. And okay, so there was the Brexit news. Let's talk about something different maybe. What's coming up later today? Does anyone know what the FOMC is in the US? Anyone have any idea? Why would that maybe be important fundamental news? Anyone know what the FOMC committee is in the US? What do they help determine? It probably gives it away right here. Interest rate changes. It's a committee in the US that determines monetary policy. They'll make a statement later today. They'll decide whether or not they're raising the federal interest rate or not. And so it could cause major dollar movement. And this website, Forex Factory, is an example of a platform that gives you, remember we talked about extraordinary economic events, and we also talked about regularly scheduled economic events in the slideshow. So we just got done with an extraordinary economic event. We prepared a potential position in case there's wild news that creates more fear. Boom, we could get in on a sell position on that pound. With this is regularly scheduled announcements. The FOMC has regularly scheduled. Every so often they give a statement, and every so often they decide whether to change interest rates. And we know in advance when those statements will be and when those potential changes in interest rates will be decided. Okay, and later this week there's even more stuff in the U.S. The non-farm payroll announcement, biggest jobs announcement in the U.S. each month. Okay. The earnings numbers are coming out in the US right at the same time on Friday. So I'll show you that as well on the schedule. But let's talk about the FOMC statement. Does anyone have an idea if interest rates go up, if the US instead of, and if you look at this column, you see it says previous, it says forecast, and then actual, okay? And you see some of the prior announcements in green. If the actual is in green here, that means it was better than expected for the currency. Typically leads to strengthening of the currency if it's better than expected. This one was written in red. It was worse than expected for the forecast. That typically lends a weakening to the currency. Not all the time, but that's the general idea. Now, the higher level the announcement, red being high impact, orange and yellow being medium and low impact, the higher the importance of the announcement, then the more movement you'd expect from numbers that are better or worse than expected. Okay, so with that general idea, as we come down here, what if the federal funds rate, the interest rate in the US, instead of keeping it the same at 2.5%, what if they raised it unexpectedly to 2.75? What do you think would happen to the value of the USD? Would an unexpected increase in interest rate cause the USD to strengthen, do you think, or drop? Asat, you said drop. Any other opinions? Some of you are saying it would go up. Okay. The general idea here is this, and this will answer everybody's question or hesitation about it. If the interest rate gets higher, is it more expensive to get a loan or less expensive? Yeah, it's more expensive. Higher interest rate, it's harder to get your hands on dollars. It's more expensive to take a loan. So higher interest tends to give a higher value then to the currency. Okay, it makes it so there's less of them easily obtained. And so anytime there's less of something like diamonds, if they're rare, then the value is higher. Okay, so this is the general idea. With interest rate increases, it tends to increase the value of the currency. Now, because the expectation is they won't raise it, if they did, you could have a rapid strengthening of the USD. Now, just to take a look back at what's been going on in the US, this committee has been talking pretty dovish of late. Dovish means, and it's the opposite of hawkish, dovish means they're kind of talking down the idea of raising interest rates. They're saying we're going to take our time with that. Only if the economic conditions are good enough would we consider raising interest rates. They said maybe 1 or 2 times during this year, but not guaranteed. It's market dependent, that sort of thing. They're not coming out right now in the past month saying, yes, we're going to raise the interest rate for sure 2 or 3 times this year. If they were saying that, you'd see the dollar strengthening more, typically. Okay, so the situation is this: if they come out later today, and they say, oh, we're going to keep the interest rate the same at 2.5%, then that's not a surprise, right? That's what's expected. You probably wouldn't see a big reaction from that. If they lowered the interest rate to 2.25% or raised it to 2.75%, you'd probably see a pretty large movement with the USD. Okay. Now, beyond the interest rate number, even if they keep the interest rate number the same at 2.5%, which really is the expectation right now, what about the statement? What if they keep the interest rate the same, but they come out and start to talk hawkish, meaning, boy, we really see improvement in the markets. The jobs numbers have been great. We're really seeing improvement, and inflation seems to be going up. And what if they talked really positive about what they view the economy in the U.S.? Nahid, correct. You'd probably see a strengthening of the USD just based on what they say, because the anticipation is, next quarter they'll probably raise it. And so even before they raise the interest rate, if what they say makes people believe that they're going to raise it soon, then you see a strengthening a lot of times of the currency. So sometimes it's not what happens with the rate, which is important, but sometimes it's beyond that. It's what do they say in the statement, okay? And usually when that statement's going on, you can find it on business networks. You can see live while they're talking. You can see updates as it's coming in to see what are the words they're using. Are they being hawkish or dovish? And then you could make a move accordingly. Okay, fundamental news. And this interest rate decision will post on here right around 7 p.m. Almost exactly. You'll see the number come in. Okay, but again, I think we're looking more at the statement now than the rate, because it's really unexpected that there'd be a rate change. And if there was, wow, we'd probably see some big movement. Okay, any questions on this? And by the way, you can click the folder. Okay, if you didn't know some of the things I just said, you can click on the folder and look, it tells you. What's the usual effect? If the actual number is greater than forecast, it's good for the currency. It tells you right here. It tells you what it measures, all about it, why do traders care. So everything I just told you is right here on the platform. It tells you the same thing, that typically if the interest rate comes in higher than expected, it's good for the currency, meaning it'll strengthen it. And low, then obviously the opposite would be true as well. If it's lower than expected, it would drop. And that's true for any of these announcements. If you don't know what's net lending to individuals, what's that have to do with anything, click on the folder, it tells you. If actual is greater than forecast, it's good for the currency, and they explain why it's important. So that's the case for any of these announcements. Type OK if you're with me so far with that. Wow, you guys are easy. I'm not getting a lot of questions. Please feel free to ask questions as we go, or add input if you wish. Okay, so let's then look at the USD on the chart, right? That would make sense. Remember, we want to combine fundamental with technical. So this has not broken our support line yet. You see it's still here, and it actually kicked up here. Let's go back. Maybe it did. Let's look. Here's our 5-minute candles. No, it didn't break the support. You see it's testing it, and it's still sitting here, waiting, this GBP, JPY. Okay? And so didn't quite decide to break through this level. And we'll see if it drops eventually. Now, let's then look at the USD. And by the way, you might wonder, why am I using this chart station instead of the MT4? I just like it better for looking at charts. Obviously, when you're looking at exact entry points for buy and sell, you need to look at the MT4 because that has the spread factored in with AvaTrade, the small spread that's there. So you'll see the exact price that's listed for buy sell. Don't go by, I'm looking at this for the general movements, but don't go by this chart or any other station other than your AvaTrade MT4 for your actual prices for your buy and sell. Okay, and you see the support line held. You could have traded up from the support. It tested it, went down by a little bit, and boom, there it goes up. So you could add a pending order to buy above, a pending order below to sell, and whichever one wins out wins. And the other, if it got activated by accident, you'd have your stop loss on it anyways. Okay. All right, so let's go. I want to take a quick look at my demo. See, it didn't activate. It tested the support, but we put our entry point just low enough. You see, this was my entry point, right? So this false signal where it tested the support and went back up did not trigger our sell. If we had our sell position too close to the support, then it would have got triggered with the false signal and I'd be losing. And I would have just lost at my stop loss. So this is the idea of making the strike zone wide enough. Make the strike zone wide enough, meaning give it some leeway beyond the support line that if it breaks it by enough, then you're convinced you want to sell, right? But it didn't break it by enough, so I didn't enter the sell yet, and I'm okay. That's a good example of why you want to have a little bit of leeway there before you enter, so that you're convinced that it actually broke the support and that it's moving. In this case, Asat, you're asking if we'd have 2 pending orders. In this case, you'd have had a market order buy here, right? You'd have had a market buy because it was already right above the support, so you wouldn't have had to have a pending, and your pending order would have been the sell. And so on your buy position, on your market buy, you'd be in the money, and your stop loss on the buy position could be at the same spot as your entry point on the sell. So if you're winning on the buy and then it reverses and it hits your sell, then you're out of the buy with your stop loss and you enter the sell. Okay, so you could have both going, not pretending to know which way it'll go, but being set up that you could profit either way. Okay, and in this case, where might be your take profit on the buy? Probably at this ceiling here would be the first spot that, according to technical analysis, might make sense. If you were buying up off this support, if it got to here, you might take your profit because this is the next level of resistance on the 5-minute candles. Okay, and if it breaks, then you're out. Hit your stop loss. Now you trigger the sell. You don't have to have a preference. You can trade both directions. Okay. All right, so let's then look at the USD chart. And maybe we do Euro USD. I've seen enough of the pound. I've heard enough about the pound. Let's look at the euro. Now, the euro is being moved by Brexit as well, obviously. So it's something to keep in mind. So let's look at bigger candles, maybe 2 hours. Okay. So what do I see here? I see potential support level here, and I see a resistance level here. And it's almost right in the middle of that. Now, Asat, you were saying, can you do 2 pending orders? This is a good setup for maybe doing that. That big news from the FOMC tonight, you don't know for sure how they're going to talk. Maybe they're going to talk bullish. Maybe they're going to talk maybe they're going to talk hawkish. Maybe they're going to talk dovish. What kind of pending order could I put up here above this resistance that if they come out and talk really dovish in the FOMC and the USD weakens, that means the euro then might climb. So if it breaks through this resistance level, you might expect a breakout movement. So if I put a pending order here saying if it breaks through, I think it'll keep climbing. This is preparing for potential large movements with the FOMC press conference. What kind of pending order would I put just above the resistance? A SOT correct buy stop. So you could prepare a buy stop here, and then in case it's the opposite, in case they come out and talk more hawkish than expected, and the USD strengthens, that means the euro would drop against the USD. I might have another pending order right here below this support as what kind? If it breaks below the support, that means maybe the FOMC talked strong about the US economy, so then the USD is strengthening. Sell stop. Correct. So this is an example where you could set up both a buy stop up here and a sell stop down here with the idea that you have no idea which way it'll go. You don't know what the FOMC might say this evening, but you're prepared for a large movement in either direction, right? So this is a concept that you can set up. I'm not saying this exact pairing is right. Maybe not. Maybe don't pair it with the euro. Why? Because the euro's got all this Brexit stuff going on that could cause movements for other reasons. Okay, so maybe you pair the USD against a more neutral asset like the yen. Let's look at the yen. So now we've factored out Brexit, right? So now I can do the same thing here. If it breaks above this resistance, then your buy stop is here, and if it breaks below this support, then your sell stop is down here. Okay, you still could set it up. Same concept. All right, and maybe USD JPY makes more sense. That's no trouble. So then you'd say, well, where would my take profit be? Well, I already have a line drawn up here on USD JPY that this is a resistance point. You see it hit here and dropped. It hit here and dropped. It hit here and dropped. So if there is a breakout through here and it hits your buy stop, then the most logical place maybe to take your profit could be the next major resistance point on the 2-hour candles there. That might be your take profit. Okay, and if it breaks the support down here and triggers your sell stop, then the next support level looks to be maybe right about here. which is this old resistance right here. And once it broke through, it climbed up. So maybe about here, you'd take your profit. Now listen, those exact spots of entry point and exit point is more of an art than a science. And you can see the lines aren't exact. You're going on probabilities. And this goes back to my mathematics days. Okay? You're going on probabilities about what's more likely to happen than not. Where did the asset spend 90% of its time? Right? It's not always 100%. And what I mean is, I'm saying this is the resistance point. Well, the wick did go through a little bit, right? It did break it by a little. And I'm saying this was an old support because it kept hitting here and going up. Well, it went through once, but 90% of the time, the movement was between those two lines, right? 90% of the time here, the movement was between these two lines, even 95% of the time. It's only a small time that it went down and back up. So you start to just look at probabilities, percentages, all right, and less exactities. Type OK if you're with me with this idea. With a breakout setup, ready for a breakout in either direction. Okay, and you don't have to use the 2-hour candles, because on the 2-hour candles, that's a pretty big movement to get to these points. You could do something like this on 15-minute candles. Okay, on the 15-minute candles, I could be looking somewhere closer, or 30-minute, or 5-minute. Okay, you could do more of a short-term strategy. On the 5-minute candles, I see resistance right here, right? If it breaks through here on the 5-minute candles, then the next resistance is here. And likely if it breaks here, it'll run up to here. Not for sure, but look at the chart. What happened the last time it broke above this line? It ran all the way up. So when you'd use 5-minute candles and these types of movements, it's if you're a day trader and you have time to sit in front of the chart and trade more often. And honestly, there's a lot more opportunity for profit if you're able to do that. If you don't have time to watch these small movements and prepare pending orders here on 5-minute candles, and then an hour later it's up here and you have a pending order for a sell limit, and if it hits here, you think it'll drop just like it did here. Okay, so you could do this all day and make money on these small movements. There are day traders who do this. If you don't have that much time, then you're looking at something like we're looking at, maybe the bigger movements, 2-hour candles, even 1-day candles, that you're going to be more patient with those movements. And you're willing to wait longer for it to get to the points of entry and take profit and that sort of thing. So David, you're saying what's a good time frame for fundamental analysis? Really, there's more than one good time frame. For this Brexit situation, I've seen a lot of profiting on 5 15-minute candles. 5-minute, 15-minute candles, because the news keeps changing through the day, and you see a big run, 40 pips up, 50 pips down, 60 pips up, and so on. So there's a lot of opportunity with this type of breaking news to put pending orders on 5-minute, 15-minute candles for breakout movements, and then when it breaks out, look at the movement, okay? But not everyone has that kind of time, and actually with this type of news, where you have no idea what the next report's going to be about Brexit, sometimes it's more risky to try and do a longer term move, because by the time the next day comes, the story is completely different with this type of political situation that's occurring with Brexit. And then other things are more certain, like let's look at what's going on in Australia. And we'll finish on this because we're almost out of time. Australia's economy, this is just one website that I use that focuses on Australia, marketsandmoney.com.au. As you read through these articles, and I've been doing it for months, okay, focusing on Australia, and I'll show you on the chart, Australian dollar's been dropping as this bad news has been coming in. And this is more of a big picture move. I don't care about the little 5-minute, 15-minute candle movements. I'm looking at 2-hour candles, 4-hour candles, 1-day candles, 1-week candles, because look at the Australian dollar, AUD, USD. Let's look at the Australian dollar on 1-week candles. Look at that. These are 1-week candles. The Australian dollar has been dropping since January of last year. So for a full year, look at the downtrend. What caused this? Why has this been happening? And why have I been able to, every time I see a high point, trade down and have a hedge above it? And if it goes the wrong way, I'm certain I can keep it hedged and eventually it'll come back. Why am I certain of that? Or as certain as I could have been over the past year? You're never 100% certain. That's why you hedge or have a stop loss. But why was I preferring to trade down on the Australian, and look what it did all year and look how much money you could make? Well, look at the articles. Business conditions in Australia falling sharply. Next crash imminent, with a question mark, obviously. Let's look. Central banks are running out of time. Look at this article. Australian property declines could see interest rates cut further. They're talking about Australian dollar interest rates. If you read that article, what do you think's happening if the sentiment is, oh my gosh, they might lower the interest rate in Australia? What's happening to the value of the USD or of the AUD if people think that? And so, David, this is a bigger picture. Correct. Some of you already have responded. When people think interest rates might be lowered, a lot of times the value of the currency drops. And so with this type of news coming in, this isn't something that changes overnight. Property prices declining, jobs numbers bad, on and on and on. Okay. There are articles about people being over indebted with their homes in Australia. Sydney and Melbourne, two of the biggest housing markets, property prices dropped 1.5%, 2% last month. Okay, so there are some big warning signs in Australia occurring. And, you know, what happened to the price of iron ore over the past year also? It dropped. Why did it drop? Who does Australia, who's their major buyer of iron ore? Australia is a big exporter of iron ore. And if iron ore prices are dropping and their sales are dropping, the Australian dollar tends to drop. So if you're following this type of fundamental news, what country is having this huge economic slowdown right now that buys tons of iron ore? China. Exactly, China. So why did the Australian dollar drop? Partly because exports were down and prices were down on iron ore because of the slowdown in China. So what do you think would happen to the value of the Australian dollar if the US and China, if a news article breaks, trade deal worked out? US and China agreed a trade deal. What do you think will happen to the value of the Australian dollar? Tinny, you say it'll go back up. Makes sense, right? And look at the charts. Every time there's breaking news about China that's bad, whether it's their economic numbers or the trade war, you're seeing bearish pressure on the Australian dollar. Okay, I say every time. Again, there's no 100% certainty in things, but if you look at it the vast majority of the time with that bad news on China, Australian dollar's dropping. And if it happens to go the wrong way with that kind of news temporarily, you can hedge it. You can have a stop loss, of course. Now, so what do you think will happen if you see news coming out that US and China are getting into more disputes? They can't work anything out in their trade deal. Bearish pressure, right? Obvious. Bearish pressure on the Australian dollar because they assume that if things are bad for China, not a good trade deal, slow economy, less iron ore being bought by China. Okay. Now, what's interesting, real quick, a tidbit, and then we'll finish up. There's an article down further. As wintertime came in China, okay, they have an air pollution problem. And the steel making plants that use the iron ore to make steel, right, sometimes have to be shut down when the smog gets too high. And in the wintertime, smog gets worse in China. And so in these steel producing cities, you see in the wintertime, sometimes if the smog is high, and I sometimes follow the smog reports in China for this reason, if I'm trading on the Australian, you'll see that they suspend steelmaking plants activities temporarily. Well, that creates less demand for iron ore temporarily, and you sometimes can see that reflected in the Australian dollar as well. Okay, so wintertime in general puts bearish pressure as well on the Australian dollar for that reason. So there are all these types of fundamental things that you can trade on that are bigger picture things that aren't breaking news stories every day. Okay. And so you might be looking at bigger candles for trading on housing price declines, big economic things that are maybe poor in Australia or any place else. That's something that maybe you can count on with bigger candles for longer term movements. Okay. So you've got both ends of the spectrum here, short-term trading, long-term trading, all can be driven by fundamental news and combined with your technical analysis can give you nice entry points and exit points. Asat, you're saying AvaTrade signal is bullish for what? Before we finish, I want to address this question and then we'll call it quits. Tinny, beginners can trade all of those time periods. You just have to understand why you're trading on the asset and that it makes sense to you. ASAT, oh, the AUD USD. Okay, well, because the negotiations, they actually has been some positive feel about the negotiations between China and the US, ASAT, that has maybe helped the Australian dollar rise up and be bullish. Okay, so in the shorter term, negotiations are going on right now with the US and China, and there have been some positive feel that could help. Also, because of the environmental rules in China, they started to require just last month, they started to require that they buy a higher grade of iron ore. They're not allowing the low grades of iron ore to be bought because they cause more pollution in China. Guess who has an optimal grade of iron ore? And all of a sudden the demand went back up again for iron ore is Australia. Australia has what they call the 62 or 63% purity grade iron ore. That's the minimum requirement that China now requires for the iron ore being bought. So if you pay attention to environmental rules in China too, which just kicked in this year, or at the end of last month, you'll see that. Look at the chart. Look what happened. Look at the 1 week candles starting when that rule kicked in China. Look, a support level formed. Like magic. No support level the whole year. The environmental rule kicks in that they have to buy a higher grades of iron ore, which is good for Australia because they have higher grade of iron ore. Look, boom, support level kicked in. But still, further slowing of the economy of China then likely could bring this back down towards the support. And these are 1 week candles, so that's a lot of distance between where it is now and the established support. Okay, doesn't mean it has to happen, but you see what the history has shown. Okay, all right, good questions. I'm glad we got some questions in the end. All right, great. So thank you for joining me. Please follow the links. All of the webinars for the upcoming weeks are listed. I'll be adding more, and you're all welcome to come back. Okay. All right. Bye for now. Best of luck with your trading.